can I ask you, what impact will this have on the trade talks? Because the Chinese have said, be prepared. We're not going to roll over on this.
So territorial control, Hong Kong, Taiwan, Xinjiang, these are some of the absolutely key core issues for China's leadership. And the risk here is that the Senate bill crosses a red line. It indicates that the US is trying to interfere in China's internal affairs. Now, of course, China wants to get a trade deal done. China's growth is weak. The economic incentives are lined up behind a phase one deal for both sides. At the same time, for Beijing, some things are more important than economics. The one China policy is more important than economics. The risk here is that those political concerns now intrude on the economic logic, and a phase one deal gets harder to do.
Yeah, and speaking of whether it's hard to do or not, Kit, I mean, I do feel that what markets have been pricing in leaves a lot of room for disappointment. And the fact that we now understand they're going back to the May agreement and looking at that again, should markets take that negatively? Because we know what happened 6 months after.
Well, if you could get back to the May agreement and get it done, we'd have been in a better place, at least in terms of market sentiment. Let's put it this way: bond yields might be higher.
Yeah.
So things would have been more optimistic if you got back to that. I think almost the danger this morning is, they couldn't get that done because the two sides viewed things differently. Now let's throw some proper sort of bits and bobs of machinery into that conversation and make it even harder. But I think the markets are priced for, most of the more recent tariff impositions being reversed. So we've got a certain amount of unwinding of tariffs priced into the price, I think, at the moment. Hard to sort of be, too sophisticated about it. But I think people are going to sort of start thinking over the next few days that, maybe actually there is a real danger that nothing gets unwound.
Yeah.
Okay, hold that thought, Kit, because, Tom, if we take this as there's a bit of a spanner in the proverbial phase one euphoria, if markets are priced to perfection on phase one, Fitch are talking this morning about get ready for growth sub 6% here in China at 5.7%. You, as a group of economists, are also beginning to guide us lower. So if there is no phase one deal and tariffs do get impacted in December, how much more real is a sub 6% growth in this country?
So we think we're going below 6% with or without a trade deal, Manus. Our view is that the trade deal affects the composition of growth, not the level of growth.
Okay.
If we get a trade deal, we go below 6, but it looks a bit healthier. We have more exports, we have more private sector investment. We don't get a deal, or even worse, we get those December tariffs rolling on, we still go below 6, but growth is more supported by a kind of unhealthy stimulus mix of state-driven investment.
Tom, what does this mean for the global picture? Because over the past few weeks, there's been a lot of talk about a bottoming in the global manufacturing cycle. And obviously, risk assets have gotten very optimistic on the prospect of a phase one deal. How optimistic are you about a bottoming and a bounce back in 2020? The IMF managing director was fairly optimistic about that yesterday.
I think there's a couple of things which have happened in the last few weeks which have made global markets a bit more optimistic about the 2020 outlook. First, there's the hope of that phase one trade deal. Secondly, fears of a hard Brexit have receded a little bit. Now, if we take the phase one trade deal out of the picture, and even worse, if we actually get those December tariffs rolling on, not our base case, but certainly a possibility if talks unravel, then I think some of that optimism about a stabilization in 2020 growth is going to start coming out of the markets.